Went above $2,000 an ounce. We're just pulling back to about 1942 today. Silver also taking a breather, but platinum not so much. What's the next stop for gold after this, what Neil called emotional move higher? Joining me now is Jeff Kilberg. He's the founder and CEO of KKM Financial and a CNBC contributor. Jeff, how would you describe this recent move higher? And I do think we need to have the inflation discussion. I mean, there's plenty of people out there saying you need to own this because inflation is coming, and that's fine, but it doesn't explain why bond yields are going the opposite way and falling to record lows.
Yeah, it's fascinating, Kelly. I think it's a bit of a delayed reaction. Everyone's talking about the U.S. dollar trading at 93. And remember, the U.S. dollar was at above 103 in the depths of March during the carnage in the equity market. But here we are seeing gold break out. I think the bulls are in control. More importantly, the shorts are on the run. And that's really indicative, Kelly. We look at the volume, look at the futures. Typically in the month of June, when we saw gold moving around a little bit, we saw a volume of about 200,000 contracts today in the front month future. Today, we're seeing 600,000 front month futures. So that's 3 times the typical volume. So you are seeing some people covering shorts. But more importantly, I think people realize and look to the month of March, what actually appreciated? What asset class? It wasn't small caps, it wasn't large caps, it wasn't mid caps, it was precious metals. So therefore, I think people are trying to get a bigger allocation moving forward, as there's still a lot of anxiety underneath the market. And that's why I think the move higher in gold ultimately signals that people are still anxious and concerned as we come out of this COVID-19 economy.
Right. So you say $3,000 an ounce is possible. We have analysts on our website who are saying $3,500 an ounce is possible. Anything's possible, right? But, you know, at what point is this just becoming a mania as opposed to something grounded in reality? Again, we look back to the last time the gold price was near these levels. It was about 2012, 2013. There was no inflation on the horizon then.
Well, and Kelly, I don't think there's any inflation on the horizon now. The Fed maybe wants us to talk about inflation, but there's no inflation. What's really interesting, the Fed is in their meeting right now this week, but what did they articulate last time? They articulated the fact that they're not even thinking of raising interest rates till 2022. Therefore, that inflation conversation, we have to put that way out on the horizon. But what is interesting is the technical component. You look at silver, the higher beta, way to play precious metals. It seems there's a lot of room to run nearly up to 30. But short term, maybe not short term, Kelly, but I see $2,500 on the gold target. That's only 28% higher here. And as we know, we saw the last couple months that volatility and that increase in volume can really move markets higher. But there is a finite supply of gold. Make no mistake about that. But as you see more and more asset managers look to allocate 3%, 4%, or 5% of a client portfolio, they have to own gold, either GLD, and that goes into the futures market. So gold and silver are both moving higher as long as we don't see any retaliatory actions from other global central bankers, because no one's really happy that the U.S. dollar is at 93 outside of the United States.